All right, everybody, Bitcoin is setting up for another retracement. So if you have been thinking about buying Bitcoin, either long-term or short-term, I'm going to make a suggestion that you wait just a little bit. Now, I could be wrong about this. Been wrong before. Will no doubt be wrong again. But this is my best guess. One of the things that I don't want to do is I don't ever want to buy into hype. I don't want to ever be, because they're sitting on it. What's happening is you're sitting on it, and you're watching it, and you're watching it go up and watching it go up. It goes from 1900 to 2000, and then it goes to 2100, and you're thinking, man, I really got to get in on this. It goes a little bit higher. Now we're at 2160. Like, man, I got to jump in on this. And then you jump in at exactly the wrong time. And then the market takes a gigantic dump on you, and you end up walking away saying things like, oh, I'm always in the wrong side of the market. I can't ever get this right. What's the problem with me? Why am I so terrible? And all this negative stuff that really is derived from a fact that you just made a bad decision. It was not, or most certainly bad timing. Maybe not even a bad decision, because buying Bitcoin is certainly the right decision given the rally, but picking your points is important. And what you hear from most of the Bitcoin advocates is, well, you just got to buy. Just buy it. Buy it and hold it. Buy it and hold it. And that is trust me, from experience, whether you are an investor or you are a trader, buy and hold is an absolutely terrible long-term strategy, especially when you do it over the wrong period of time. And so what I want to show you is a better way to do it. So I actually made a call about shorting the Bitcoin back here. Actually, it was, where was it? I don't remember. I made a call earlier about selling Bitcoin. It went really well. Had about a 30% decline. And then it rallied from there. Well, now we're at a point where we are likely to see another retracement. And so I want to walk you through what's going to happen, I think. Now, we are right on the sell area here at 2163. And I'm expecting to see a move back down into about, I just had some almonds in there in my throat now. 1843. Now, that's about a 15% decline. We could see it drop as far as 1688. Which I imagine, math is not an exact science, but somewhere around 20%, I would say. So a 15 to 20% decline here in a retracement before we potentially rally again. Now, take a look at the RSI down here. RSI is relative strength, so it gives us an indication of how much enthusiasm the market has with the current move. And as you can see with this last rally, boom, lots of enthusiasm. All the way up, then we hit another low rally. Now we had a decline here, which was represented here, and then boom, another pop. But look at the pop here. This pop coming on a lot less volume, but still going into an oversold condition at about 80. So what can we infer from that? Well, we can infer maybe some market exhaustion. Maybe it's just gearing up for another explosion. Like I said, you never know. But you've got two different options here. If you are concerned that maybe the market's a little overbought and I really want to find a better place, I would rather wait for a decline and buy after a 15% or 20% decline rather than absorb that 20% decline, then you've got a couple of options. First option is you can sell somewhere inside of this red zone. Now, I have done a bit of Fibonacci work here in order to identify where the potential reversal is going to be. What I call the kill zone. It's where the market comes in and then dies. And so wherever this red zone here is the kill zone, and what we expect to see is the market somewhere inside of this zone to die and to have that retracement. Now, I don't know if it's going to happen right here at the 127 extension or if it comes up here into this 2618 inversion. But wherever it's going to happen, it's likely to happen if it's going to happen inside of this red area. And then, of course, the potential return, and if you're going to short the market here, is going to be somewhere around previous structure here and previous support here. Now, that is anywhere between, as I said, a 2 to 1, or it's a 15 to 20% retracement. It's about a 2 to 2.5 to 1 risk reward. So you're risking 1 to make 2, between 2 and 2.5. So pretty good risk reward ratio here on this particular trade. Now, if you got a problem shorting markets, no problem. You don't have to worry about that. What you do is you just simply take a look at the structure level and you say, all right, here's what I'm going to do. I'm going to reverse this sucker. I only want to be with the trend. So I'm going to wait for the market to fall into this zone. Okay. Do something like this. And then I'm going to have my stops below the spike low here. and I'm going to have my targets back up at wherever the structure high is. And at this case, assuming the market was to reverse right here on a dime at the 127 extension, and you bought it back at this first structure high this first structure level, you'd be looking at about a little over 1-to-1 risk reward, 1.3-to-1 risk reward. Now, you can modify this if the market goes a little bit higher before it retraces. Look, all of a sudden our risk reward gets a little bit better. If it reverses right here and you decide, you know what, I really want a 1.5-to-1 risk reward ratio, that's pretty easy. You're just going to do a little something like this. You're going to do that. You're just going to modify your entry a little bit. Well, now I got about a 1.6-to-1. Now, I got to wait for the market to dip. If it stops on a dime at previous structure resistance, then I won't get filled. But I don't want to be filled if I can't get my risk reward right. Right? So whatever your rules are, whatever your standard is for trading this market, that's what you want to pay attention to. What is my risk reward? How many times am I right? How many times am I wrong? Those are the kind of things that you have to know before you trade. And this is a simple way to set it up. So you can either trade against the trend, which, guys, despite what people will tell you, is a very effective way to make money in the market. Or you can trade with the trend, just paying attention to structure, support, and resistance. Now, if you like this kind of stuff, if it's interesting to you, then I would love to invite you to come and join some of the stuff that we do at Trade Empowered. We've got live trading rooms. We've got War Room, which is a morning update where we run through all of the trades of the day, kind of like what we're doing right here, and we explain a little bit about the trades that we're involved in and why we're involved with them, all the way up to full training courses like the Ultimate Trader Transformation. This is what I want you to do. Just go check out tradeempowered.com. Tell me what you think. Take a look around, find something that interests you, and then get involved with us. Because if you want something to change in your trading, you're going to have to change. So go and check it out, and we'll see how this turns out. I don't know, maybe we'll be a loser. Maybe I'll be showing my tail end by the end of this. But I do tend to be right about these kinds of things, and we'll find out if this proves true as well. Thanks for listening.